Hi, good morning. Wait for a while. Cool. We do May June paper, May June 2019, May June 2019, paper number 21. May June 2019, paper number 21. I will do the answer now. After the class, you do again. That's how you learn. Okay, first I do now. You just watch me do how I do. Then after the class, you do it yourself again. Give me 1 minute. I changed this one. I adjust my spacing. Okay, read the first big question. You can see the question, right? Always read the required first. Record this transaction in the following book, which appear in the next 2 pages. Balance up and bring down on the 1st May 2019. We need to prepare petty cash book, and also we need to prepare 3-column cash book, both in one. Okay, so what I understand, I need to know which one will go to the petty cash book, which one will go to the cash book. So to know that, I will read the first paragraph here. Sabullah is a trader. His financial year ends on 30th April. He maintains a 3-column cash book and a petty cash book. The impress amount is under 20, and all payments, see not all payment under 90 will be in a petty cash book. So this is your key point. Any payment below 90, will go to the petty cash book. You understand this? Okay. So first one is petty cash impress, restore the amount from the bank. So I go to see the petty cash book. My petty cash book got 18. The balance on the first day is 18, but my impress amount is under 20. So I need to top up how much? Anyone? I need to top up how much? The balance that I have is 18. The impress amount is under 20. So I take under 20 minus 18. Again, 102. 102 I impress. So this impress amount, we will minus the bank plus the petty cash book. because they say from the bank account, right? So minus bank, go to the petty bank cash book. Okay, go to the credit side, 102. I take out the money from the bank. I take out the money from the bank on the first day, same thing. And if the money goes to where? The money goes to the petty cash. Then go to the petty cash. In a debit side, total receive 102. This money come from where? The same date, April 1. I don't repeat the same date. If you want to repeat also can, it's up to you. Then here, right, bank. That's your first transaction. If you don't understand, please stop me and ask me. Number one, done already. Restore the amount. Next one, paid Kenneth a credit supplier 58. Okay, 58 is the amount is below 90. Any amount, any payment below 90, any payment below 90 will go to the petty cash book. So this one will go to the petty cash book. Payment 58 on the 3rd. So April 3rd, right here, Kenneth, 58. Always remember, whatever you pay, you must do the analysis. That payment for what? Okay, whatever that you pay, you must do the analysis. So this analysis for this is amount paid 58. Kenneth is my trade payable. Trade payable will be ledger account. Okay, your date correct, your detail correct, your total paid correct, your analysis correct, you get 1 mark. Okay, if you put in a wrong place or if you didn't put, you don't get the marks. After that, Ilja, a credit customer, paid his account 350 by bank transfer after deducting 2% discount. Okay, this 350 is the account of 350. It means before discount or after discount. This 350 is after discount or before discount. This 350 is after discount or before discount. They already minus or haven't minus? They haven't minus. Since they haven't minus, so we need to minus 350 times with 2%. I get 350 times 2%, I get 7. 7. So the payment is 350 minus 7, 343. So we will receive 343, and then the discount is only 7. The discount is 7. Give me 1 minute. Okay, so I'll go to the cash book in a debit side by check, right? The bank transfer. Bank transfer is a bank. So 343, discount is 7 on the 9th. Am I correct? You know, it's 8. April 8th. And then who pay me? Elijah. Yeah. Next one. Pay the taxi fare. Both stationary, both will go to the petty cash book. Both will go to the petty cash book because both are below 90. So I go to the petty cash book. 11 taxi fare. 14 taxi fare will be travel. Another one is 15 stationery. 24 stationery will be postage and stationery. Postage and stationery. Next one. Paid for office. Paid for office expenses by check, 115. So we pay 115 is more than 90, so it's go to the cash book. Paid by check. Check means put under bank 115. The date will be 19. Office expenses. Office expenses. After that, paid bus fare. Bus fare is 99 is in here, petty cash book. On the 24th. Is it 24th? Yeah. Bus fare will be in a travel. Paid Ziningi, a credit supplier, 585, a check after deducting 2.5% cash discount. So this one is after discount or before discount? Yes, it's after. Okay. How much the discount? How much is the discount? Can you calculate? How much is the discount? 585 over 97.5 times 2.5. 15. Who don't understand this, please tell me. I'll explain again. Who don't understand how I get 15, why I divide like this? If you don't know, please tell me. I'll explain again. You know, huh? So it will be in a credit side. We pay, right? Yeah, we pay. Bank 585. Discount is 15. The date will be 27. And the guy's name is ZINI NGI. Cannot. Next one, receive a check 100 from the tenant for rent. So we receive means 100 here. This is for the rent, and it was on 28. After that, cash sales 820, of which 800 was paid directly into the bank. Okay, this is a cash sales on the 29. This will be the sales. 800 I paid into the bank. The balance 20 will be in a cash. Do you understand this? Cash sales 820, 800 paid directly into the bank. So the bank will be 800. So the balance 20 will leave it in the cash. It's not a contra. Contra means the money goes to the cash. From the cash, go to the bank. It's not from the sales. We sell, we straight away put in a bank means it's not a contra. It's a bank. Just straight away put in a bank. Any problem? Okay, we are done with all the transaction. We just balance up. How to balance up? Just leave one line. Draw a straight line. Draw a straight line. Okay, I want to balance the discount first. This is 7, just total up. This is 15, just total up. Just total up, no need to balance. Discount, no need to balance. But the cash, we need to balance. I get 270. 270, right here, 270. 270 will be your balance CD on the 30th April. Can I stop at balance CD? No, you're not allowed to stop at balance CD. This balance CD will become balance BD on 2019 May 1. Okay, any question? Okay, if no question, next one is the bank. Bank, I feel my credit side is bigger. So what I do is I'll total up the credit 119 plus 102 plus 115 plus 585. I get 1921, 1921. 1921 minus with 343 minus 100 minus 800. I get 678. That's my balance CD. April 30th, balance CD will become balance BD. 678 balance BD. 2019 May 1. Any problem? Okay, then balance up the petty cash also. Petty cash, just total up first. Step number 1, just total up 58, 24, 23, 105. We just total up first. Okay, after that, double line for the analysis column, then continue with this one. Here got under 20, leave one line under 20, here also under 20. Under 20 minus the answer, you get 15. So this is balance CD. April 30th. Balance CD will become balance BD. April, not April, May. May 1. You can stop here. Any problem? Please stop me if you got any problem. If you want, you can write the year 2019. You write or don't write, still acceptable. Okay, that's it for the first Roman question A, Roman 1 and Roman 2. We move on to the next question. This question is actually very compact. They have a petty cash book, they have a cash book, they have a bank reconciliation, they have a book of prime entry, like 4 chapters in one question. 4 chapters in one question. Okay, they say Sabola's bank statement show an overdraft of this March. On the 30th April 2019, he found out that the bank had not recorded the transaction entered in the bank column the following dates. The bank statement show a debit balance of 240 Sabola's home insurance, which should have been debited to the personal account. So this is the error. Error in bank statement. Error in a bank statement. You mistakenly plus or you mistakenly minus. You mistakenly plus or mistakenly minus. Can you tell me this one? You mistakenly plus the insurance or mistakenly minus the insurance in the bank statement. Mistakenly minus. So if you mistakenly minus, because insurance we pay, right? They will minus from the bank account. If you mistakenly minus to do the correction, you need to plus or minus. You mistakenly minus already in a bank statement. You mistakenly minus in the bank statement. To do the correction, you need to plus or you minus again. Yes, you need to plus, add back. You need to add back. Okay, this one, you already know what this one is plus. So now we have a 19, 27, 28, and 29. So I want to make it my life easy. I'm going to check the cash book. I check the cash book, 19 and 27. 19, 27. So I take these are 115, 585. I write the amount here. 115, 585. Both of these will be in a credit side. 28 and 29. 28 and 29. 28 and 29. 100 and 800. 100, 800. They're in a debit side. Debit side. So my bank reconciliation is BACC. BACC. BACC start with B, stand for. B stand for balance. Balance shown in bank statement. Balance shown on bank statement. Exam no short form, right full bank statement. How much? 1118. Is it correct? Is it correct? No, they say overdraft. If overdraft, must put a bracket. Overdraft must put a bracket. And this one need to plus with A. A stand for amount not yet credited. Amount not yet credited. Okay. Which one is amount not yet credited? Yellow or green? Which one is amount not yet credited? Okay, simple, right? They say not yet credit. Okay, there's a key point there. Not yet credit means debit. You can assume that. I know it's like looks stupid, but you can assume like that. Okay, not yet credit. Since they say not yet credit, so they take from where? They take from the debit in the cash book. That's it. Simple to remember, very simple to remember. Not yet credit is it's recorded in the debit side in the cash book. What are they? 100 and also 800, but you need to know the name. You need to know the name. To get the name, rent and sales. Check in the cash book, rent and sales. Am I done with the plus? No, we have another one plus. We have another one, which is the correction, the bank statement correction. But you don't need to write bank statement correction. You write bank error. It's a bank error. Now we are doing the correction. How much? 240. So you total up these three. 240, 900. I get 1140. So you plus negative 1118 plus with 1111. Now negative 1118 plus with 1140. I will get 22. Who don't understand this? Please ask me. I'll explain again. Okay, no problem. Then we continue. This one will minus with C. C stand for check not yet presented. Check not yet presented. The check that we paid, the check that we paid haven't presented to the bank. So the check that we paid, we will record in the credit side. So the yellow color. How much? 115 and 585. The name you check in the question. I mean the cash book. Office expenses and Zinengi. Office expenses and how to spell the lady's name? Ziningi. Then you total up 115 plus 585. I guess 700. So 22 minus with the 700. I get 678 in a negative. 678 in a negative. So this one I call balance shown in cash book. Exam no short form. Easy? Easy. The next one. Advise Abolo whether each of the following will affect the financial statement for the year ended 30th April 2019. Give a reason for your answer. Received an order for goods to be supplied in May 2019. Yes or no? Will affect the financial statement or not? Financial statement on 30th April 2019. And this one is receive an order and made to be supplied in the May 2019. No effect. Why no effect? Not matching principle. not matching principal. The key point is here, order, supplied, order, realization. Yes, this is the application of the realization. Okay, the revenue is recognized. The revenue is recognized when the legal liability if you want to say legal liability to be passed to the customer, or in a simple word, the revenue is recognized when the goods delivered to customer, in a simple word lah. So no entry. So no entry will be made when an order is received. Whenever we receive an order, yes, we take the order, but we don't record in any financial book. We don't record any accounting book. Okay, decided to close the business in the effect of 31st May 2019. Yes or no? You decide, confirm, you confirm already, decide already, you're going to close the business. Yes, since you decided, yes, the financial statement will be affected. What we do is we will update all our figures into the latest figure so we can sell all the assets. Okay. When it is known that the business is going to be discontinued, it may be necessary to adjust the value of some assets. Some assets to their expected sales value. So we will know lah, we can sell the assets, how much money that we can receive. We can decide that. Okay, now? We are done with the first question. You see, I take only 20 minutes to finish one question, 30 marks. 20 minutes for one question. Okay, next one. Question number 2. Jade is a customer for Ideal. On the 1st April 2019, Jade owed Ideal 440. They exchanged the following documents, blah, 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 blah. Name the person who issued each of the following document. In each case, suggest one reason for the issued document. Reason for the issued document. On the 17th, debit note relating to the goods supplied on the 12th. Okay, wait. Debit note will be issued by the sorry, wait, before that, you need to decide who is the customer, who is the supplier. Jade is a customer of Ideal. So Jade is the customer, Ideal is the supplier. Okay, now Jade is the customer, Ideal is the supplier. So now debit note will be issued by the customer or supplier. You know, you don't know. Very good. Okay. Debit note issued by the customer. So who is the customer? Jade. Why people will issue a debit note? Why people will issue a debit note? To request a reduction in the invoice. Okay, to request a reduction in the invoice. Next one is on the 20th April. 20th April credit note. Credit note is issued by supplier, issued by the supplier, and our supplier is Adil. Okay, why people will the supplier will issue a credit note? To notify of a reduction in the invoice. Last one on the 30th April statement of account. You know, right? Statement of account is a summary of the transaction. We don't record in any accounts book. We don't record in any accounts book. Who will issue? Supplier. Okay, this one is to summarize the transaction, or you can say to notify Jade of the amount owing at the end of the month. Or you can say to summarize the transaction for the month. Summarize the transaction for the month also can. Okay, next one. Prepare the account of Ideal as it's appear in the Jade's book. Okay, so now I need to do the Ideal's account in a Jade's. So who is Ideal for Jade? Who is Ideal for Jade? Trade receivable, trade payable. I read again. Jade owed Ideal. Jade owed Ideal means so now I'm going to do the Ideal account. So I'm the Ideal. My name is my name is Jade. My name is Jade. So Jade is me. Jade is me because now I work for the Jade. Prepare the Ideal's account. It would appear in the Jade's book. So I work for the Jade. So I'm the Jade. I need to assume myself I'm a Jade. So Jade is me. So I owe Ideal. If I owe Ideal means if I owe Ideal, Ideal is my trade payable. Trade payable is my liability. Understand or not? You need to decide this one first. You need to decide who are you. You need to decide who are you first. Okay, I'm the Jade. So I owe Adil. So Adil is my trade payable. Adil is my trade payable. So if I owe Adil 440, this 440 will be in a credit side. Why it's in a credit side? Because I owe that guy. That guy is my liability. Liability balance BD will be in a credit side. Balance BD. And the date will be, what is the date? April 1st. April 1st. Okay, after that, I will record all the transactions. First one, a check received to settle account less 2.5% cash discount. So we receive how much we owe. We owe the late. Wait, you receive or you pay. So this transaction here from the Ideal's Idles from a point of view. Okay, but now the account here is from the Jade's point of view. You understand now? Okay, so now we receive or we pay. Check to settle account 2.5% cash discount. We receive or we pay. We receive or we pay. We pay, you understand? Because we owe the guy, we will pay. So how much we pay? How much we pay? 440 times with 2.5% is the discount. So 440 times 2.5%, I get 11. My discount is 11. So 440 minus 11, we will pay 429. If we pay 429, bank account will be credit. Bank account will be credit, but the trade payable account will be debit. Trade payable account will be debit 429. 2019 on the April 4th. April 4th. This one we write here bank. Why it's in a debit side? Why it's in a debit side? Because when we pay, our trade payable will be reduced. Trade payable is liability. Liability reduced will be in a debit side. Am I done? No. We have a discount. How much the discount? Discount is 11. Discount is 11. So right here 11. Okay. If you're sure about this is a discount allowed, discount received, you can write a discount received or discount allowed, whatever. Okay, because this one we pay means this one will be discount received. If you're not sure about that, if you're not sure is it discount received or discount allowed, don't write anything, just write discount is good enough. If you just write discount, you still get a full mark. Okay, but if you're very sure about the discount received, then you write a discount received. Okay, next one. Invoice for the goods are 560 less trade discount. Okay, remember not trade discount we cannot record in the ledger. We cannot record in the ledger. So we will exclude the trade discount. Cash discount you must record in the ledger. Cash discount you must record in the ledger account. Trade discount we cannot record in the ledger account. Okay, we will exclude the 25%. So how to exclude, we still need to calculate 560 times 25%. 560 times 25%. I get 140. So 560 minus 140, I get 420. So this is the purchases. How much is your purchases? 420, not 560. 560 included the trade discount. We need to exclude the trade discount from in the ledger account, from the ledger account. So how much the trade discount? 140. So I exclude the trade discount. So the original price is 420. The 420 will be in a credit side. 420 will be in a credit side. I write here purchases. Why it's in a credit side? Because your trade payable will be increased. Your trade payable will be increased. Purchases account will be debit. Trade payable account will be credit. Now we are doing trade payable account. The date is 12. So right here 12. Any question, please stop me and ask me. If you're not asking, I'll just continue on. I'll assume you understand. Okay, next one is a debit note. We don't record the debit note. We don't record the statement of account anywhere in accounts book. We don't record the debit note and the statement of account anywhere in the account. So don't care about this. Okay, don't care about this. Okay, a credit note relating to the sum. Credit note you must record. Credit note you must record is a return relating to the goods supplied on the 12th April. List price is 100. Okay, they say list price. List price means the price before minus the trade discount. I repeat again, what is the meaning of the list price? List price, the original price before they minus the trade discount. So whenever on the 12th, whenever you record in the book, you record after the trade discount. You record in the book after the trade discount. So on the whenever we purchase, whenever credit note is written, whenever we return also, we need to exclude the trade discount. Since this is a list price, they haven't minus the trade discount. I need to minus the trade discount before I record the return, because credit note means it's a return. So how much is the return? 100 times 25%. I get 25. So 100 minus 25, I get 75. 100 minus 25, I get 75. So how much is your return? 75. Remember this one, whenever you see the list price, it's actually before the trade discount. Since it's a before the trade discount, you need to exclude the trade discount. So 75 will be in a debit side. Why debit side? Because whenever you return your trade receivable, or you owe, how much that you owe the guy will be reduced. When was it? 28. Okay, I think I'm done with all the transactions. Statement of account, no need to record. That's it. I balance up this account. How to balance up this account? Leave one line, double line. I feel my credit side is bigger. 440 plus 420. I get 860. 860 minus 429 minus 11 minus 75. I get 345. 345. That's my balance CD. Can I stop here? No, you are not allowed to stop at balance CD. If you stop here, you lost 1 mark. Balance CD will become balance BD on the May 1st. May 1st. Cannot. Easy. Next one. Jade's year end 30th April, she decided the following information: credit sale, credit cash sales, credit purchases, cash purchases, trade receivable, trade payable. I'm very sure they're going to ask me to calculate the trade receivable turnover. Okay. The Jades allowed a customer of 28 days and 30 days by the supplier. On 30th April 2018, Jade calculated the trade receivable collection period was 29 days and the trade payable 35 days. You see, I allowed 28 days, but my customers take 29 days. I allowed 30 days, but I take 35 days to pay the trade payable. It's look like not really good on the year 2018, which is last year. This is the last year. This is the last year. This is the allowed. Okay, this is this year. Okay, you can see the difference. This year when they haven't calculated, maybe we will calculate later. This is the allowed. Okay, and this is the what happened on the last year. So I see the question. That's my question. Okay, calculate the trade receivable collection period. Trade receivable collection period. Wait, what is the formula first? The formula is take your trade receivable over credit sales times 365. Trade receivable over credit sales times 365. How much is your trade receivable? My trade receivable is 2800. 2800 over a credit sales. Credit sales is 29,600. 29,600 times with 365. How much? I get 34.53. But you know, right? Yeah, round up the next your answer to the next whole day. So 34 is actually 35 days. Okay, I suggest to write the whatever that in the calculator, whatever that you get in the calculator, you write first in a 2 decimal. After that only you show the round off. Don't straight away round off. You show the step by step lah. Okay, so wait on 35 days. Allowed is 28 days. Last year I take 29 days. This year I get 35. So become better or become worse? Become better or worse? It's become worse. Suggest one advantage to Jade of the change of the trade receivable collection period. Okay, wait. Who's the Jade? Huh? Who's the Jade? Jade is the customer. Jade is the customer. Suggest one advantage to the Jade of the change of the trade receivable collection period. So Jade will get what? What is the advantage for the Jade? No, we receive late. We receive late. This is the trade receivable. We receive late. If we receive late, what is the advantage? Is there any advantage whenever we receive late? Maintain a good relationship with the customer. Customer pay late. If our customer paying late us, okay, this is our trade receivable. The customer pay us late. Okay, maybe we are not sure with the advantage. Leave it first. Let's talk about disadvantage. What is the disadvantage? Okay, the main disadvantage is increased risk of irrecoverable. That's a disadvantage. We have a risk of irrecoverable. Okay, another one. We need to wait a longer period to collect the money. Yes, cash flow worsen. Okay, we don't have the money in our business. Okay, what is the advantage? Advantage is we no need to give discount. Will not have to allow cash discount. We don't need to give, since the guy pay late. Allowed is how many days? Allowed is on 28 days, but the guy take 35. So we no need to give discount. It's advantage actually, but compared to the disadvantage, disadvantage is more risky lah. Okay, the guy not going to pay us any money. Maybe will happen. Understand not? Okay, now the question asks me to calculate trade payable payment period. Trade payable payment period is trade payable over credit purchases times 365. And my trade payable is 2350 over credit purchases 30,300 times 365. 2350 divide 30300 times 365. I get 28.31. If you round off, you'll get 29 days. Round up, run to the next day. Okay, even though it's 3, we just plus 1. Even though it's 3, we just plus 1. Okay, I checked. Allowed, wow, allowed is 30 days. Last year, 35 days. Now it's become 29 days. Satisfied? Yes or no? State whether the trade payable would be satisfied with the changes of the trade payable payment period. Give the reason. Satisfied? Yes or no? Yes. Or you can write yes, or you can write satisfied. Either one lah. You can say yes, or you can write satisfied. Okay, why? Why they are satisfied? Because Jade paid more quickly than in the previous year. Or you can say Jade paid more quickly than within the credit period allowed. Within the credit period allowed also can. Any question? Now another, this one I take how many minutes? Not 30 minutes to finish the second question. Can? Okay, question number 3. Question number 3, wait, I adjust my. Hey, any problem, please stop me and ask me. Question number 3. Min started a business, selling machinery. Selling machinery, remember this, there's a trap there. Selling office machinery on the first, machinery is my goods. Is my goods, because I'm selling the machinery. So machinery is my goods. He did not maintain a full set accounting record, so I know this is an incomplete record. All purchases, sales were credit terms. All payment made throughout the bank, and all payments is all money received was banked in. So there's no cash. There's no cash. Everything in bank. Min was able to provide the following information: cash capital deposited in the bank. This is the opening capital. During the year ended, non-current asset purchased. Interest. Okay. Let us see. This one you pay. This one you receive. You receive the loan. Credit sales, amount paid, you pay. Okay, discount received and discount allowed. Return to the credit supplier. Return from the credit customer. And bad debt. Bad debt means irrecoverable debt. Bad debt is irrecoverable debt. Last time we called that bad debt. So the new term is irrecoverable debt. So then the closing balance is this. The question asked me to calculate the credit purchases. So the best way to calculate the credit purchases is prepare the trade payable account. Trade payable account. So I'm going to highlight all the information that related to trade payable in a yellow color. Credit supplier is a trade payable. Discount received is a trade payable. Return trade payable. Balance CD trade payable. Do you see any other trade payables here? No, only this 1, 2, 3, 4. Only this 4. Okay, now? So I'm going to do the trade payable account here to calculate the credit purchases. So this is my trade payable control account. Trade payable control account, or you can say total trade payable account also can. Total trade payable account also can. Okay, my total trade payable account, the balance BD normally will be credit side because trade payable is liability. But this question, you don't have any balance BD because they just started the business. They just started the business. So no balance BD, no balance BD. And amount paid, when I pay to that guy, to that guy, my trade payable will be reduced. If the trade payable reduced, it will be in a debit side or credit side. Anyone can tell me? Trade payable, when I pay the trade payable will be reduced. When the trade payable reduced, it will be in a debit side or credit side. It will be in a debit side. So I go debit side, I had 1, 4, 6, 2, 5. My bank account will be credit. My bank account will be credit. My trade payable account will be debit. Remember that. So right here, bank. Okay, see if the question asked me to calculate. They didn't ask me to prepare the account. They just asked me to calculate. So I'm not going to write the data. So it's a wasting time. If you want to write, can, but it's wasting time to write the date. Also, I don't care about the dates because I prepare this account just to calculate the purchases. Discount received. When I receive a discount also, the trade payable will be reduced. So will be in a debit side. Right here, discount. And the return always will be in a debit side for the trade payable, will reduce also. That's why. So returns. And also balance CD. I said just now, balance BD will be in a credit side because it's liability. Balance BD will be in a credit side because it's your liability. And your balance CD will be in a debit side. 1, 4, 3, 4. But this question, we don't have BD now. Okay, I think that's it. I already put all the information that related to trade payable in my account. So I will balance up. This balancing, the answer that I get is my purchases. More specifically, it's a credit purchases. The purchases, more specifically, is a credit purchases. How much? Wait down. 1462537521401401434. I get 18574, 18574, 18574. That's my credit purchases. That's my credit purchases. Simple. Any problem on the credit purchases? Okay, no problem. I will continue with next one. Calculate the amount received from the credit customer during the year. Okay, this one also actually the bank. They asked me to calculate the bank. Okay. Okay, that one I'll explain whenever we do the bank account. That one related to the bank account. I'll replace. I will tell whenever we do the bank account. So amount received from the credit customer. Amount received from the credit customer is actually bank. So the for the trade payable, we have the bank, right? This one, something like this. Okay, something like this. But for trade payable is in a debit side. For trade receivable, it will be in a credit side. They asked me to calculate this. They asked me to calculate this. Okay, how to calculate this? Again, I tell you, the easiest way to do this is, the most easiest way to do this is, we just prepare the trade receivable control account. You put a trade receivable control account, you balance up, you will know the answer. That's if you want to use a calculation also can, no problem. But the easiest way is, the straightforward and easiest way is just prepare the trade receivable account. So I'm going to highlight. I'm going to highlight with all. I'm going to highlight all the trade receivable item with the green color. So this is my trade receivable, trade receivable, trade receivable, bad debt also trade receivable. Only bad debt, trade e-recoverable debt or bad debt is related to trade receivable. Always, always. So I'll put all this information and balance up. I will get how much money that I receive from a trade receivable. That's the answer. Okay, first, suppose we balance BD, but we don't have any balance BD for this question because they just started the business. So first one is the bank credit sales. Sorry, credit sales will be in a debit side or credit side in a trade receivable account. Two things. Trade receivable is an asset. Asset, whenever credit sales, asset will be increased. Asset increase will be in a debit side. 21640. It's a sales. Another thing is sales account will be credit side. Sales account will be credit. Trade receivable account will be debit. Okay, now? Next one. Cash discount. Discount allowed. Whenever we allow a discount, the guy's account will be reduced. If the guy's account reduced, will be credit. 338 discount. Are you following me? After that, next one is return from the credit customer. Okay, if the guy returned to me, the guy's account will be reduced also. So credit 204242 is written. Then e-recoverable debt, the guy died. E-recoverable debt means the guy died. When the guy died, we will minus the guy's account. We write e-recoverable debts. E-recoverable debts. 380. Okay, after that, do you have anything else? No, all the green I settled already. So now you balance up, you'll get a bank. So I'll leave one line, double line, double line. I feel debit side is bigger. 21640, 21640, 21640 minus 338 minus 2042 minus 380. I get data. Let me check. Oh, I'm so sorry. We have a balance CD, right? I forget the balance CD. Sorry. We have balance CD. Amount owed the credit customer. I forget to highlight this. Okay, 1980. That's a balance CD. Okay, for trade receivable, your balance BD always will be in a debit side because asset balance BD will be debit side. Your balance CD will be in a credit side. Balance CD will be credit side. How much the balance CD? 1980. Just now I forget this. 1980. So now you balance up. Same 21640, 21640, 21640 minus 338 minus 2042 minus 380 minus 1980. I get 1916900. That's my bank. The amount that we received from a credit customer. Cannot? Any question so far? Okay, next one. There's one student asked me, what is this? Interest-free loan from the parents, 5,000. Okay, this one nothing much. We received the money from his parents. We receive a loan from the parent. That's it. What do you want to know about that? We receive a loan from a parents. Don't care you receive from a parent or we receive from bank or anywhere. Maybe if you receive from the bank, you need to pay the interest. Since you receive from the parents, you don't need to pay any interest. Maybe whenever you have a money, you need to pay back the 5,000 in the future. You need to pay back in the future. That's it. It's an interest-free loan, means you don't need to pay any interest for the loan. You just pay back 5,000. But if you take the loan from the bank, maybe every month or every year, you need to pay certain percentage of the interest. Okay, the meaning of interest-free means you no need to pay the interest. But it's a loan. Loan means you need to pay back. You need to pay back the exact amount, 5,000. Okay, if you take from the bank, you need to pay 5,000 plus with how much the interest, that one. But I don't think so we will pay this one. We just started the business. We just took the loan. We just received the loan, but maybe like after a few years only, we will pay back. Okay, after that, the question say prepare the bank account for the year ended and say insert the missing figure which represent the expenses for the year. So you need to prepare the bank account. Then you balance up. The different will be your expenses. As the question say like that. I just follow the question. So, but before that, let me decide which one will go to the bank account. Of course, this one, because we receive the money, we pay, we receive. This one will go on amount paid. Discount received, discount allowed. We don't receive money, we don't pay money. Discount, we don't receive any money, so it don't go to the bank account. Return also no, there's no cash flow in the return, so no. Bad debt also no cash flow. This is the balance CD for the bank. Okay. Do you think anything will go to the bank account? Okay, 1, 2, 3, 4, 5. Apart from this 5, there's one more thing will go to the bank. Can anybody tell me what is that? There's a cash flow, there's money in or money out. Apart from this 1, 2, 3, 4, 5, there's one more. Can anybody tell me? You know, you don't know. Maybe whenever you look like this, you know that there's one more thing that, okay, I give you tips, it's a money in. It's a money in. One more money in. You receive the money. Which one is that? This one. They didn't give you here. It's a money received during this year. The money received during the year. So we prepare this account to calculate the money received what. So money received what. So that money received also will go to the bank account. So how many items will go to the bank account? 1, 2, 3, 4, 5, and 6. There are 6 items will go to the bank account, and then we will balance up to calculate the expenses. So now we need to decide which one is money in, which one is money out. Understand or not? Any questions so far? You understand this one? Okay. So first one, capital. Capital is money received. Capital is money received. So money received will be in a debit side. So right here, 2018, January 1. The first capital will be January 1. Other than capital will be December 31st because they didn't give me any exact date. So the capital they gave you January 1. So I write January 1. How much is the capital? Again, 65,000. 65,000. Other than capital will be last day since they didn't give me any exact date. So after that, 64,000 non-current asset. So it will be in a credit side. Why it's in a credit side? Because you buy a non-current asset means you will pay money. Right? So money means credit side. Non-current asset. Exam no short form. Exam write non-current asset full. Exam write full non-current asset. Okay. So after that, we receive a loan, right? Yeah, 5,000. 5,000 we receive a loan. So the loan will be debit side because we receive money. We write here loan. Or you can write loan from parents also can, but loan is good enough. If you write loan is good enough. After that, amount paid. We pay amount 14625. We pay to the credit supplier. So it will be in a credit side since we paid 14625. You can write here trade payable. Exam no short form, write full, write trade payable. After that, balance CD weight. Balance CD weight. Let me write the money received from the trade receivable first. 16,900. I'm very sure a lot of students will forget this because it's not inside the question, right? So people will forget this. But still, it's my money received. What? Trade receivables. Trade receivables. After that, only I put the balance CD. My balance CD of the bank is 5392. 5392. So this 5392 will be debit side or credit side. Let me think. They didn't say anything at this. They say just say cash at the bank. So it's asset. It's not overdraft. It's not overdraft. Overdraft means they must tell me overdraft. If they didn't say anything, mean I will assume it is a normal balance. Normal balance is asset. Normal balance is asset. Asset will be asset balance CD. Asset balance CD will be in a credit side. So right here, balance CD. My balance CD is 5392. 5392. Okay. If possible, leave one line for the expenses. If you can, leave one line for expenses, then write balance CD. But if you forget to leave one line, also no problem. You just balance up this. You'll calculate the expenses. You'll calculate the expenses. So 65,000 plus 5,000 plus 16,900, I get 86,900. 86,900 minus 64,000 minus 14625 minus 5392, I get 2883. 2883. Can I stop here? Never do that. Huh? They asked me to prepare the account. If account means this balance CD must go here BD. You are not allowed to stop at balance CD. 2019 January 1. Okay, but the previous question here, I didn't, the balance CD, I didn't go here because they didn't ask me to prepare the account. They asked me to calculate only. So I prepared this account just to calculate. So they're not going to give me any marks for the balance CD BD. So I didn't show. If you want to show also can. It's good if you show. It's good if you show. But since they asked me to calculate only, so I don't want to waste my time to put the BD. If you want to put also can, no harm. But if they ask me to prepare account, account means you must show the BD. You're not allowed to stop at CD. Any problem? Okay, no problem. We continue with the next one. Our next one is a theory. Min has been advised to start maintaining a double entry records to prepare the annual financial statement. State 3 advantage to the Min maintaining double entry records. Okay, what is the advantage of having a double entry record? Double entry means a full set account. Okay, whenever you have a full set of account, the main one, if you ask me, possibility to reduce the fraud. People cannot cheat you. Possibility of fraud is reduced. So nobody can cheat you because you have a detailed record. Since you have a detailed record, so people cannot cheat you. Apart from that, the preparation of financial statement, exam rightful, is easier. Okay, the preparation, reduce error is not really a good answer. Okay, reduce error is not a good answer because you not even prepare the account. You didn't do the accounts. Okay, you didn't do the accounts means there's no chance to happen an error. Right? You understand now? You didn't do you didn't prepare the account. Okay, so preparation of the financial statement will be easier because whenever you have a trial balance, from the trial balance, want to prepare the financial statement is quite easy. But whenever you didn't give me a trial balance, you give me this information like this. The information like this, ask me to prepare the financial statement. It's not that easy. It's not that easy. Okay, next one is, what is the advantage of maintaining a full double entry system? The profit will be more reliable. The calculation of profit or loss is likely to be more reliable. So we can trust the calculation profit or loss whenever you keep the full detailed double entry system. But if you just take the simple information and then you simply do the financial statement, we cannot trust the profit that we get. Okay, apart from these three, you can say a full detail are available about the asset, liability, revenue, and expenses. Acceptable. Okay. Another one is more informed decision making is possible. Apart from that, you can talk about a greater degree of control. Okay, a greater degree of control. We can control the business by looking at the reliable financial statement whenever you have a double entry system. Okay, that's the advantages. Okay, next one, suggest 2 reasons why the means a bank manager interested in the financial statement. Okay, why a bank manager will be interested in financial statement? The first thing is, normally bank will give you what? The bank will give you a loan. So before they give you the loan, they will check the ability, our ability of the business to pay any interest when due. They will check whether we have an ability to pay the interest or not. Okay, yes, they will check whether we have an ability to pay the loan, the full amount. But before the full amount, they will check at least you have an ability to pay the interest for now or not. In the future, you will pay the loan, but for now, you need to pay the interest first. Okay, apart from that, the bank also will check the bank overdraft. Okay, they will check. But actually, I think the same answer. I don't want to repeat. Check the ability of the business to pay the bank overdraft. You can use the same sentence. Okay, for bank overdraft or interest, you use the same sentence. Another answer I want to write here is to check the security. They want to check the security available for any loan or overdraft. So whenever the company go, you cannot pay the loan means, can they take your asset or not? Can provide suitable investment? Bank investment is not related. The bank manager, how the bank manager checking for the investment? The question is, why the bank manager want to see your financial statement? So investment and the bank is not related at all. Not related at all. Okay, next one is suggest 2 reasons why means credit supplier may interested in the financial statement. Why a supplier want to see my financial statement? Why a supplier want to check my financial statement to check what? Check the likelihood of the account being paid. If I sell you on credit, can you pay me or not? Okay, what is your position? I want to know before I sell you on credit, before I want to sell you on credit, I want to know whether you can pay me or not. Whether you can pay me or not. Are you in the position that in the pay? I will check before I sell. Okay, apart from that, I will check your financial statement and then I will decide what to help determine the credit limit. You know what is the credit limit, right? You don't know what's credit limit. You can owe that guy until this amount. You can owe that guy until this amount. So it's for like a 5,000 or 20,000 or 15,000. How to decide the amount? I will check your background first. If your position is very good, you're a very good company, then I don't mind give you a higher credit limit. Okay, 10,000 or 50,000. Okay, but you're a very normal company. I really didn't trust you, but I still accept you. So I give you like a 5,000 or 3,000. Your limit will be like a 3,000 only. So you need to pay the 3,000, then only you can continue to do business. You buy until maximum 3,000, you need to pay me first. So we will set the credit limit by looking at their financial statement. Okay, by looking at their financial statement. Can or not? These are the theory questions for question number 3, right? Yeah, question number 3. Any problem? Okay, no problem. We'll do the question number 4. Later, you redo this question again. You need to redo this question again. Then only you'll understand. Wait. Next one is actually partnership and also ratio. Partnership and also ratio. Okay. Liam and Mia in a partnership. Their financial year ends on 31st January. They share profit loss ratio 2:1. So Liam will get 2/3. Mia will get 1/3. And this is their capital account and then their current account. Current account, 1 debit, 1 credit. Okay, later we just put it this. And then there's a drawing. Each people also got drawing. On the 1st August 2018, Liam transferred 14,000 from the current account to his capital account. Okay, bear in mind, later we will minus the current account to his capital account. We'll plus the capital account, 14,000. Okay, why he transfer, I don't know. Why he transfer, I don't know. The question says they transfer, so I just show the transfer. That's it. Why he transfer, I also don't know. Okay, from the current account, so minus the current account plus the capital account. On the same date, he transferred his personal motor vehicle valued 6,000 to the business. So this is the additional capital. Additional capital. So we plus the capital. The following extract from the profit and loss appropriation account. Oh wow, they already prepared the appropriation account, but they say extract. What is the meaning of extract? Extract means a part only, not a full one. Not a full one. We just recall what is the formula for appropriation account. We have a profit for the year. plus IOD minus IOC minus partner salary, then we get a residual profit. This residual profit will become share profit. But the problem here is they have a profit, they have an interest on drawing, they have an interest on capital, they have a partner salary, but they don't have a share profit. They don't have a share profit. So we need to calculate the share profit. Later we will calculate that. Before that, let me check. The question asked me to calculate the percentage, and also they asked me to do the current account. Okay, wait. If you want to do the current account, you need share profit. You need a share profit. So first, somehow we need to calculate the share profit first before we start answering this question. So I write I calculate the share profit here. I write here because here no space. So the share profit for Liam and Mia. For Liam, I just take the residual profits 3180 times with 2/3, 1/3. 3180 times 2/3. I get 2120. 3180 times 1/3. I get 1060. So this is the share profit. First, we need to calculate the share profit before we start doing. Oh, sorry. It's a bracket, right? Thank you. It's supposed to be share loss. It's a share loss because it's negative. Thank you. It's not a profit, it's a loss. Thank you. So the share loss is 21. Since it's a loss, so I put in a bracket also. Since it's a loss, I put in a bracket also. Okay, so we answer the question number A. Calculate the percentage of the rate of interest charged on the drawings. So before that, let me write the formula first. What is the formula? Drawings times with the percentage, we get the interest on drawing. So they didn't specify for Liam or Mia. It's up to you. You want to take which one. Both also will give you the same answer. So I'll take Liam. I take Liam. 955. So my answer is 955 times with the X percentage. I don't know. Let it be X. How much the Liam's drawing? Liam's drawing is 19,100. 19,100 times with what? I will get 955. If you want to take the Mia also can, it's up to you. It's up to you. You want to take a Mia or Liam. Both also will give you the same answer. It's up to you. I take Liam. If you want to take Mia's ones also can. So how to find the X? X percentage will equal to 955 over 19,100. And of course, need to times 100. 955 divide 19,100 times 100. I get 5%. Must write the percentage. Must write the percentage. 5%. Okay, calculate the percentage of the rate of interest allowed on capital. Same thing, it's the same thing, same formula also. We take the capital times with the percentage, you get interest on capital. You want to take for Liam or Mia, up to you. You'll get the same answer, but I take Liam. I take Liam. 10,200. I don't know the percentage. And capital, how much the capital for Liam? How much the capital for Liam? Okay, wait. I don't want to take Liam. You know why I don't want to take Liam? Because Liam got some problem. He got transferred that, transferred this, and okay, he got a lot of plus and minus in a capital account. I don't want to. If I take that, I need to adjust that one. So it's like mafala. So better I take Mia. Mia is better. So Mia have no calculation, nothing. We just take the capital of Mia, 60,000 and 3,600. It's straightforward. It's much more straightforward compared to Liam. Because Liam, there's an increase in capital. There's an increase in capital. Maybe I need to adjust all this. So I don't want to take Liam. I want to take Mia. Okay, take an easy way. Okay, I want to take Mia now. Mia's capital is 3,600. Interest on capital is 3,600. And the capital is 60,000. is much more straightforward. So X percentage equal to 3,600 over 60,000 times 100. I get 6%. Easy, right? Okay, we take the easy way. Can or not? If you take Liam one, you need to plus this, you need to plus also this one, and then you need to adjust, then only you'll get answer. Okay, that's it for question number A. We'll do the question number B. Question number B is complete the current account and partners for the year ended 31st January 2019. Balance account, bring down the balance. Okay, that one normal. So I'll start with, you remember not current account? Current account format. Drawing will be here. Interest on drawing will be here. Okay, interest on capital will be here. Partner salary will be here. Share profit will be here, but this question we don't have share profit, we have a share loss, so share loss will be here. And one more extra thing is partners loan, interest on partners loan, accrued will be here, but this question don't have interest on a partners loan, so we don't need to care about that also. So you need to remember the format first. You need to remember the format. Okay, let me start. But before this is the standard one, but before we start this one, there's an unusual things. What is the unusual things? The transfer. So this is a transfer, so we do the transfer first before we do the normal thing. Transfer his current account to capital account. So current account minus. Current account minus means debit or credit. Current accounts minus means it will be in a debit. So whose current account? Liam's current account. So right here, 14,000 in a debit side. This money go where? This money go to the capital. When was it? 1st April. That's August 1st. August 1st. Okay, no problem. Okay, next one. We have, after that, everything will be on the last day. After this, everything will be on the last day. So I just put the last day. My last day is 2019, January 31st. This one also 2019, January 31st. Okay, first I'll start with drawings. How much is your drawing? Drawing, I'll take from here, 19,100. 19,100 and also 8,500. 8,500. After that, interest on drawing. Interest on drawing, and my interest on drawing I take from here 955,425. 955,425. After that, what we have? Interest on capital. Interest on capital will be credit side. Right here, interest and capital, exam, no short form, right, full. 10,200 and also 3,600. After that, salary only for Mia. Salary only for Mia. So right here, partner salary only for Mia, 15,000. And the share loss. Share loss will be debit side. Don't forget. Share loss will be in a debit side. Your loss is 2120 and also 1060. 2120. Okay, after that, do you have anything else? No, I think everything is here. We just balance up. First, balance up the Liam. I feel Liam credit side is bigger. Okay, so I take 4,500 plus 10,200. I get 54,700. 54,700 minus 14,000 minus 19,100. 955, 2120. I get 18,525. That's my balance CD. This balance CD will become balance BD on the next day. 2019, February 1. After that, Mia, I feel, yeah, credit also bigger, credit bigger. So 18,600, 18,600 minus 2140. Don't forget, a lot of students forget to minus the 2140. So you need to minus a 2140 minus 8,500 minus 425 minus 1060. I get 6475. 6475. That's it. This is my current account. Any question? Okay, no question. We do the next question. The next question is about a ratio. Liam and Mia provided the following information at 31st January 2019. They gave you the inventory, they gave you trade payable, trade receivable, and bank overdraft. Calculate the current ratio. So what is the formula for current ratio? Current asset over current liability. Current asset over current liability, you will get current ratio. So how much is your current asset? This is my current asset. This is my current asset. So my current asset is 38440 plus with 42060 over my current liability. My current liability is this one, current liability 36250 plus 14150. So you solve this, you'll get answer. Open bracket 38440 plus 42060 close bracket, divide with open bracket 36250 plus 14150. I get 1.59. I get 1.59. It's actually 16 1.60 ratio to 1. Don't forget to put a ratio. Okay, don't forget to put a ratio. Cannot. Okay, next one is calculate the quick ratio or acid test. Okay, acid test is current asset without closing inventory over the current liability. So your current asset will be, we just take the 42060 because I just take the trade receivable only. We don't take the closing inventory. The formula is current asset without the closing inventory over current liability, same thing, 6250 plus 14150. 42060 divide with 36250 plus 14150. I get 0.83. 0.83 ratio to 1. Don't forget to put the ratio, must put the ratio. The ratio must be there. Okay, next one. Liam and Mia would be improve their liquidity of their business. Liam has suggests the both current ratio and quick ratio could be improved if they introduce extra capital. If they introduce extra capital, they want to improve the current ratio and quick ratio with the introduce of more capital. More capital means more money lah. More capital means more money. Suggest one other way in which they could increase both current asset and quick ratio. Give one reason. Can you tell me? One, they can. Yes, very good. Obtain long-term loan. Whenever you obtain a long-term loan, your reason is your current asset will be increased. Current asset will be increased without increase in current liability. Yes, your non-current liability will be increased. Yes, your non-current liability will be increased. The increase or decrease in a non-current liability don't give you any effect on the current ratio or quick ratio. So this is a good idea. First one. Second one, you can do, other than this, sell non-current asset. Whenever you sell your non-current asset, your current asset will be increased. Your current asset will be increased. That's the reason. You can receive more money. Or another one, you can say, introduce a new partner. But introducing a new partner is not really a good idea, because when you introduce a new partner, the existing partner's control will be reduced. Okay, it's not a good idea. But obtaining long-term loan and sell your non-current asset is a good idea. Okay, next one. State why selling inventory at cost price. Selling inventory at a cost price would increase the quick ratio, but no effect on the current ratio. You understand the question? You see, your current ratio is current asset over current liability. Quick ratio is current asset without the closing inventory over the current liability. If you sell, so let's say the inventory is $10, the inventory is 10. Okay, you supposed to, this is a cost price. Okay, the cost price. Selling price is actually 12. Selling price is 12, the cost price is 10. You buy for 10, you sell for 12 normally, but now you are selling at the cost price. Whenever you sell the inventory of 10, your current asset will be minus. Inventory will be minus by 10. And also, your cash will be increased by 10. Correct or not? Whenever you sell inventory at the cost price, the inventory will be reduced by 10. Your cash will be increased by 10. So there will be any effect or not? There will be any effect or not? Plus 10, minus 10. So no effect. There will be no effect. But for a quick ratio, in the quick ratio, we just take the current asset. We don't take we just take the current asset, exclude the closing inventory. So your cash will be increased. Cash will be increased 10, but the closing inventory increase or decrease, you don't care. Your cash will be increased 10, okay, but your closing inventory increase or decrease, you don't care. So your quick ratio will be increased. Here, no effect. Here, your quick ratio will be increased. This is the reason. This is the reason. But now we need to put this in a word. Now we need to put this in a word. How to put in a word? We can explain like this. In current ratio, no change as inventory decrease and trade receivable increase by same amount. And in quick ratio, increase as the decrease in inventory does not affect liquid asset. But your trade receivable or bank, this one also trade receivable or bank, because we sell on credit or sell on cash, they didn't say what. So it's either bank or trade receivable, either one are same thing only. Trade receivable or bank will increase. Trade receivable or bank will be increased. Okay, next one. Liam and Mia are considering inviting their brother, Darren, to become a partner in the business. Okay, there's a new partner. They want to invite a new partner. Suggest 4 factors they should consider before inviting Darren to become a partner. So what are the 4 things that you need to decide? Okay, the first thing, we need to know how much the guy going to give you. How much capital will he contribute? We need to decide that one first. We need to consider that one. If he's going to contribute like 1,000, 2,000, better don't take him. If he's going to consider, if he's going to contribute like 1,000, 2,000, better don't. We want more money. Then you can accept him. Okay. Apart from this, we will see how you're going to share the workload. How will the responsibility be shared? How are you going to share the responsible or the workload? We need to decide that one first. Later, now we only 2 people. We share 50-50 or 80-20, I don't know. When the new guy coming in, we need to decide that one. Okay. Apart from that, very important. What is the share of loss, profit or loss? Share of what? Share of profit and loss. Profit or loss. Will he be offered? Okay, now their share loss is 2/3, 1/3. So now when the new guy coming in, how going to share? How are you going to share? You need to consider that one first. Okay, another one. Since this guy is a brother, can they work together or not for a longer term? Okay. Will they be able to work together or not? Without dispute arising. Because our brothers are families, sometimes they work together, there's a problem there. Okay, you need to consider that one first. Okay, that one also. Okay, apart from this, another answer that you can see, what area of experts that he will bring to the business. He will contribute up. Yes, he will contribute the money. Apart from the money, what are the expertise that he can contribute to the business? Maybe he is the marketing manager in another business, so he's very good in marketing, or he's a production manager in another company. He come here, he can produce a better product. Or what are the experts that he can contribute so we can accept that guy? That one also has answer. Later I save this file and send you. Later I save this file and send you. Okay, the next question, I think the next question we already discussed. Hey, where's the question? Wait. The next question we already discussed in the class. I don't know whether you people remember or not. Nadia, right? Yes, Nadia, we already discussed in the class, I think. Yes or no? You remember or not? If you cannot remember, then we discuss. If you can remember. You want to know this one? Hello. Okay, ready. Then we do. We just do only. Beta. Okay, Nadia is a trader. She has a limited knowledge of bookkeeping, but attempt to prepare a set of draft financial statement at the end of first year of trading. She prepared the following financial statement. Oh, okay, this is not even a financial statement. They don't have the NCA. They didn't put like a NCA, CA. Then why she put in a bank overdraft under the asset? Okay, then we have a suspense account also. It's a problem. Okay, got some few simple problem lah. Okay, so it's supposed to be NCA, CA, then total up, capital, NCL, and CL. This is the format, your state financial position. Okay, but here got some problem, and also got suspense account. If you got suspense account means there's some problem, some errors are there. So then she discovered the errors here. She discovered the errors. So what we supposed to do for her is, first one, prepare the journal entry for error number 1 and error number 2 only, and then complete the following statement to show the effect on the profit of correcting the errors. So effect of the correction lah, effect of the correction. This is the draft profit. This profit she take from here lah. The wrong one lah, the wrong profit they put here. So we will decide that one. And also prepare the statement of financial position. So first I do the error number 1 and error number 2's correction. No entry has been made for the bank charges. No entry means I will entry. Okay, no entry means I'll entry 21. Bank charges will be debit side. 21 debit will be bank charges. Credit will be bank. Error number 1. And a narrative are not required, so I not going to write a narrative. You understand these are bank charges is expenses. Expenses will be debit side. Bank will be credit side because you pay money. Error number 2, cash sales of 100 had been debited to the cash book, credited to the account of Zahur, a credit customer. Wait, a cash sales supposed to be debit cash book, credit debit cash book supposed to be credit what? Credit the sales. But this guy mistakenly write in the trade receivables name, or trade, the customer trade receivables name. So now you need to take out from this and put in a sales. Minus Zoho mistakenly credited. So if you want to take out means it will be debit. So debit Zahur, A. Zahur 100 and credit the sales. Sales increase will be credit side because income increase will be credit side. Understand not? Debit the Zahur because we reverse back the transaction from the his account and then put in a sales account. Okay, I'm done with the first one. Okay, error number 1. It's your expenses, yeah. It's your expenses, but you didn't record as expenses. It's your expenses, but you didn't record as expenses. Now you're recording as expenses. Since now you're recording as expenses, your profit will be increased or profit will be decreased. Number 1, your expenses increase. If your expenses increase, profit will be decreased by 21. And error number 2 is it's your sales, but you didn't record as a sales. So now I'm recording as a sales. So recording as a sales means sales increase means your income increase. Income increase means your profit also will be increase. Sales increase means income increase. Income increase means your profit will be increase. Understand now? Okay, next one, number 3. The purchases written were overstated by 10. Okay, purchases written is expenses minus. Expenses minus is overstated. So now you need to plus the expenses or minus the expenses. Your expenses minus overstated. Purchases written is expenses minus. If your expenses minus, you over minus. Since you over minus, now you need to plus the expenses or minus the expenses. You add back the expenses. Everybody agree? expenses will be add back because you over minus. Purchases return is expenses minus, you over minus. You over minus already. So since you over minus, so now you need to plus the expenses. Expenses plus means profit will minus 10. Okay, the red color is not answer. Red color is just explanation for you. Blue color is the answer. Red color just explanation for you. You don't need to write the red color in exam. Okay, the blue color is the answer. Next one. The inventory. Okay, closing inventory. As I told you, closing inventory is an income or expenses. Closing inventory is an income or expenses. What is the effect on the closing inventory? Closing inventory is your income. Remember this. Closing inventory is your income. Opening inventory's effect is expenses. Closing inventory effect is income. So your income is overstated. If your income is overstated, now you need to plus the income or minus the income. Your income is overstated. The income is over. So income over means you need to minus the income. Income minus will be decrease the profit also. 199. 199. Cannot. Okay, next one. Provision for doubtful debt, 2% of the trade receivable should be created. So how much is your trade receivable? Okay, there's a dangerous thing here. Trade receivable is 3,000, right? Do you have anything happen in the trade receivable account? Anything happen in the trade receivable account? Anything happen? Yes or no? Here, a credit customer, you credited. You mistakenly go minus the guy's account. So now this 100 need to add to the trade receivable or minus the trade receivable. 3,000 plus with 100 or minus with the 100. You credited. If you credited means you already go minus the trade receivable. Credit means trade receivable you minus already. So now to do the correction, you need to add back or minus again. You have been credited. Credited means you already mistakenly minus the guy's account. So now the correction you need to add back. So your trade receivable is 3,100. 3,100 times 2%. I'll get 62. 62 is your provision for doubtful debt. 62 is your provision for doubtful debt. Created. Created means your provision for doubtful debt increase. If your provision for doubtful debt increase, is your expenses increase. Expenses increase will be decrease the profit by 62. Who don't understand this, please tell me. Which one add again? You're asking this or the 100? The 100. So you see, a cash sales 100 had been debited to the cash book, which is correct, and credited to the customer's account. Cash sales, you should not record in the customer's account, but you mistakenly go minus the customer's account. Yes, credit customer. That's why you need to read the question. Each word will give you the answer. So credit customer. So now the credit customer is here. I add back. Okay, number 6. Expenses 90 paid in the cash had been credited to the cash book. Correct? Okay, correct. But no other entry has been made. No other entry has been made. So this one will be affect the expenses will increase. We need to plus the expenses. Expenses will be increased. If expenses increase, your profit also will be decrease. Expenses increase, profit will be decrease. Understand? Next one, error 7. The draft income statement had been charged with the insurance 2,800, which was for a period of 14 months. 1 year, suppose they have only 12 months. So here got prepaid. How many months prepaid? How many months prepaid? 2 months prepaid. So can you calculate how much the 2 months? 2,800 divide 14 times 2. 400. 400. So this is what? Expenses, prepaid expenses plus or minus? Prepaid expenses will be plus or minus? Expenses will be minus. Expenses minus, profit will be increased by 400. Expenses, prepaid expenses means expenses minus. If you minus the expenses, profit will go up by 400. Okay, last one. A non-current asset excluding the premises should be depreciated 10%. How much is your non-current asset? Your non-current asset is 9,600. So 9,600 times 10%, I get 960. That's my depreciation. Okay, so your plus your depreciation. Depreciation plus means your expenses plus. Expenses plus means profit will be minus. 960, profit will be minus. Any problem? Okay, I think that's it. Just total up. Here got 500. Here got how much on 21 plus 10 plus 199 plus 62 plus 90 plus 960. I get 1342. So this one will be minus 500 minus 1342. I get 842 in a negative. So 333 minus this. I get 3330 minus 842. I get 2488. 2488. That's my profit. That's my new profit. That's my new profit. Cannot. Okay, after that, they asked me to do the statement of financial position. Statement of financial position will start with non-current assets. Then I have a cost, I have an accumulated depreciation, I have a book value. Okay, what are the non-current assets that I have? I can check here. First one, I have a premises 31,000. Premises 31,000. I don't have any accumulated depreciation for premises, so my book value will be 31,000. Then I have other non-current asset. How much the other non-current asset? The other non-current asset is 9,600. But remember, we have a depreciation. How much the depreciation? 960. You need to include that one also. 960. 9,600 minus 960, I get 8640, and I believe there's no other. There is no other non-current asset. So I just total up. I get 40,600, 960, and this one will be 39,640. After that, we have current assets. Okay, the first current asset, which almost all the business will have, is closing inventory. You want to write closing inventory, can just write inventory also can, up to you. How much is my closing inventory? My closing inventory is 3170, but wait, 3170, but wait, I remember inventory got something here. Inventory is overstated by 199. Since the inventory is overstated by 199, overstated, I need to plus or minus? I need to minus. So my inventory should show the calculation. 3170 originally overstated by 199. So I minus the 199. I'll get 2971. 2971. Understand? After that, we have a trade receivable. Trade receivable is 300. Wait, yes, but we have a mistake in a trade receivable. My trade receivable over minus by 100. Over minus already, so I need to plus back. So my trade receivable is 3000 plus 100. My trade receivable, I write here 3100. Why I write in the third line? Because I need to minus with the PDD. How much on the PDD that I calculate? 62. My PDD is 62. You want to show the calculation? Good luck. 3100 times 2%. 62. So 3100 minus 62, I get a net 3038. Are you all following me? Any problem? Please stop me. Apart from this, do you have any other current asset? Yes, cash 200. Cash 200. Cash 200. And do you have a bank? No, our bank is overdraft. Bank is overdraft. Overdraft will go to the current liability. So we leave it first. Do you have any other current asset here? Do you have any other current asset here? Anyone? Do we have any current asset here? Yes, I can see one more current asset. Here, I can see the current asset here. I can see one current asset here. Do you see the current asset here? Yes or no? Insurance prepaid. Insurance prepaid is your current asset. But if you want to write insurance prepaid, can, but the best answer is other receivables, which is 400. If you want to write insurance prepaid, can, but the best answer is write other receivable. But don't write both, either one only. Don't write both, either one only. The best one, you write other receivable, or you can write insurance prepaid 400. Okay, do you see any other current assets here? Not really. That's it. Okay, we total up this. 2971 plus 3038 plus 200 plus 400, I get 6609. 6609 plus 39640, I get a total of 46249. Double line lah. 46249 double line. After that, we have a capital. We have a capital. Capital we start with opening balance, and your opening balance will be how much? The opening balance of the capital. Yeah, it's here. 50,000. 50,000 plus with your profit for the year. I take the latest profit for the year, the corrected profit for the year, which is this one, 2488. As I told you, even though this answer is wrong, even though the answer is wrong, you take this wrong answer. If you put here, you still get the 1 mark. So you total up this, I get 52,488. Do you have drawings? Can you check the question? Do you have a drawing? Oh yeah, it's here. 10350. 10350. That's my drawing minus the drawing. Minus the drawing. Okay, 52488 minus 10350. I get 42138. 42138. 42138. Then that's your closing capital. If you want to label closing capital, can, but normally we just leave it empty. After that, we have a non-current liabilities. After that, we supposed to have non-current liability. But do you see any loan or anything? Non-current liability? No, I didn't see any non-current liability. So we straight away write current liability. Okay, current liability. The first one I can see trade payable. We write the trade payable first. Trade payable is 2680, and then we have a bank overdraft. Bank overdraft. How much the bank overdraft? Bank overdraft is 1410. But can you check, do you have anything related to bank here? Do you have anything related to bank? Yes. No entry has been made in the bank charges. Bank charges 21. Okay, bank charges will minus the bank account, but now you overdraft. Overdraft means you owe the bank 1410. Now the bank charge you 21. So how much that you owe the bank will be increased or decreased? This 21, the bank overdraft need to plus or minus. Your bank overdraft will be plus. If it is a bank, then we minus. If it's a bank overdraft, we owe the bank more. We owe the bank more. So 1410 plus 21. How much? I get 1431. 1431 plus with 2680, I get 4111. This 4111 plus with 42138, I get a total of 46249. Correct? Because these two are same. These two are same. Okay, it's balanced already. So your since you do the correction, since you do the correction here, you do the correction here, you do all these corrections. Since you do all this correction, so your suspense account here is disappeared. Your suspense account here disappeared. If you look at here, I canceled all the numbers already. I taken all the numbers except the suspense account. The suspense account disappeared because I have done all the correction. So this is your statement of financial position. Okay, 2 hours 10 minutes. We finish one full paper. 2 hours 10 minutes. We finish all the full paper. Okay, any question? You can ask me now. No question, you can leave the meeting. Thank you so much. Thank you. Any question? You can ask me. I will save this file and send it in the group. Any question? You can ask me now. No question, you can leave the meeting. Thank you. Still, I still don't get it. Why at 100? Which at 100? When it's a cash sales. When it's a cash sales. Wait, I read again. Okay, you read the question here. You didn't read the question. That's a problem. You didn't read the question. You read the question. Cash sales 100 had been debited to the cash book and credited to the credit customer. What happened was, whenever the cash sales happen, you go plus the cash book, correct, very good. And then credit, you go minus the trade receivable. This is what happened. This is what happened. But this one is correct, perfect. But the second one, minus the trade receivable, is it correct? Whenever there's a cash sales, is it correct to minus the trade receivable? No, you should not minus the trade receivable, but this accountant have go minus the trade receivable already. So what I need to do, I need to go plus the sales and also need to plus the trade receivable again, because I should not minus the trade receivable, but you go credit the trade receivable, credit customer is a trade receivable, you already mistakenly minus the trade receivable. So now to do the correction, I need to add back the trade receivable again. You understand or not? The guy mistakenly minus, so I add back. Okay, any other question? Okay, any question, ask me. No question, you can leave the meeting. Okay, bye.